Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. Wall Street beats holiday blues to post the sharpest single-day gain since 2009. Asian markets also take the cue, trade in the green. Crude prices also gained nearly 8% after touching an 18-month low following the optimism in the equity markets. Former RBI Governor Bimal Jalan will head a 6-member panel set up to review the central bank's economic capital framework. The government bars deep discounting, exclusive tie-ups and private labels for e-commerce companies. New rules will come into effect from February 1st. Okay, let's take a look at the trade setup for the day. Well, it was a bit of a late Christmas, I must say, for the world markets, especially the US markets, because after having turmoil on Christmas Eve and otherwise, there was a really remarkable pullback that we saw in the S&P 500, Nasdaq, Dow, led by technology companies. Yes, all the FANG stocks did well, but it's a really sharp rebound that we saw in the US markets. So the 2 or 3 factors, or maybe a couple of factors. One, that it was oversold and therefore a lot of people, including Arvind Sanger yesterday, was saying that there will be a bit of a bounce. But that chart gives you the story, doesn't it? A fall throughout the month of December and then a really, really sharp pullback in trade yesterday. So 2-3 factors. One, as I said, oversold. The White House assured that Jerome Powell's job is 100% safe. And I think when the markets go up, you look for reasons and you find the reasons. So one of them could be that there's assurance that Jerome Powell's job is 100% safe, so there is no going out there. Donald Trump said that the US stocks were oversold and they provided a great opportunity. I don't know if the markets latched onto that as well or no, but everything did well. Amazon jumped about over 9% after posting record holiday sales. Almost each and every member of the FANG community went up at least 6%. I think the number was 6.4%, but over 6% at least for each and every member or component of the FANG stocks, which is Facebook, Amazon, Apple, Netflix, Google. All of them went up and went up quite substantially. So it was a remarkable day of trade for the tech companies and also for the US markets, something that I think the bulls would have desperately hoped for, and it's come about. What also happened was that because of this move, crude bounced up as well. Frankly, there was no other reason aside of the optimism in the equity markets that crude extended the biggest surge in 2 years as well, and about 7 or 8% higher. Now, is that negative for India? I mean, these daily movements don't really bother too much. The trend doesn't seem to have altered too much, but Brent crude at 54 and stabilizing around those levels won't be too much of a negative, but yeah, it's not something that India likes. Nevertheless, the global market optimism rubbing in onto the world markets as well. Remember, it's expiry week, and while we might start off around the 10,800 level if the SGX Nifty is to be believed, I think most traders that we spoke to expect expiry in or around the 10,800 level, plus or minus 50 to 75 odd points. So we'll start off at about 10,775 or thereabouts. Let's see if we manage to extend the gains or do we stay stable. I think what might just aid the sentiment later on in trade and or add to volatility later on in trade would be Europe opening. Remember, Europe markets were shut yesterday's session as well. They went into 25th of December with fair degree of shorts, I would presume. And there could be some short covering that could come about in Europe in the session today, because I don't think anybody out there that day would have anticipated that there will be such a bout of move in some of the Asian markets and the US markets as well. So there could be some short covering which could aid sentiment today in our markets. Asia, remember, is a tick of green across. Nikkei, which fell quite strongly in Tuesday's session, has bounced back over the last couple of days, 3.5% up in trade. The other markets too are not doing all that bad. So we'll have a day in the green. The question mark only is, will it be very volatile or will it be okay? Let's wait and watch. Some stocks that I think could be interesting to monitor in the session today. There is an Economic Times report about how Carlyle GIC are looking to buy 10% stake in SBI Life Insurance for not SBI Life Insurance for 50 to 100 crore rupees. So do watch out for that one. Simco is another interesting one. Promoters pairing stake. So Titagar Wagons, the promoter, is going to sell about 5.64% stake in the company via an open offer. It's a 2-day OFS, opens today at a discount to the current market price for Simco. Typically, the stocks would hover in or around that price, so expect a bit of a correction in Simco in the session today on open. And an interesting note on telecom from Motilal Oswal. Of course, they're saying that the earnings pressure is persisting in the revival bleak, but the line on Idea Vodafone, they're saying that the company is on ventilator, Vodafone Idea, with about 6 to 8 quarters of cash even after dilution plan. The term that the company is on ventilator is pretty eye-popping. Not that too many people don't know about it. Private equity has been speaking on this for a while now. Let's wait and watch what happens to this one in the session today. So 2 or 3 names, then some small ones as well that could react, and we'll talk about them. Maybe the crude beneficiaries would come off in the session today as well. So watch out for the HPCLs, Asian Paints, etc. We'll get to them during the course of the day. However, let's tell you what's lined up on First Word today. Non-banking financial companies have laid out a long list of demands before the Prime Minister, but are they likely to get the nod? Vishwanath Nair joins in to talk about that. He also, of course, takes us through the details of the 6-member committee formed by the RBI to decide on its economic policy framework. Power plants don't seem to be able to capitalize on the growing demand. Yatin Mota joins in to tell us why. Indian Airlines have finally bitten the bullet and hiked prices, or so Kotak Securities says. But what does that mean for the sector? Sameet fills us in. And then Darshan gets us part 2 of what 3 global brokerages had expected at the start of 2018 and the reality a year later. Okay, let's start off with the big news that happened post-market hours yesterday, or at least came out post-market hours yesterday. Representatives from the non-banking financial companies side and the housing finance industry met with Prime Minister Narendra Modi on Wednesday. The delegation sought easier regulations to help deal with the liquidity issues that they are still facing. Vishwanath Nair joins us with what the industry wants.
A delegation of representatives from the NBFC as well as the housing finance company sectors met with Prime Minister Narendra Modi earlier on Wednesday to try and discuss some of the issues plaguing the sector. During this meeting with the Prime Minister, this delegation pointed out the current funding crunch that is being faced by NBFCs as well as housing finance companies, which started with the spate of defaults that were reported by Island FS in August and September. Now, following these defaults, these companies have been facing a funding crunch because primarily banks as well as some of the other investors, institutional investors like mutual funds as well as insurance companies, have turned wary from investing in commercial papers issued by these NBFCs and housing finance companies, or giving out further loans to these companies, which is making it difficult for these companies to access funding and then lend to their customers. Among the things that the NBFC and the Housing Finance Company delegation pointed out to the Prime Minister, they sought certain easing of regulations that are governing the NBFC sector. They said that because the RBI wants to align the regulations between the NBFC sector as well as banks, there has been a considerable focus on the asset side of the NBFC business, which has led to this funding crunch that is being faced by the industry. This delegation sought that all systematically important NBFCs should be allowed to accept public deposits. Currently, that division exists within the systemically important NBFCs. Only certain NBFCs are allowed to accept these deposits. They sought a special liquidity window from the Reserve Bank of India, where NBFCs as well as high-rated housing finance companies could pledge their loans and then access some kind of funding. They also said that all housing finance companies in the country should be allowed to access the refinancing facility that is being provided by the National Housing Bank. They also said that for life insurance companies as well as pension funds, the limits on exposures to NBFCs and housing finance companies should be raised so that these companies can further invest in the paper that is being released by NBFCs as well as HFCs. Among the other requests they made, the NBFC industry sought some kind of special treatment from the RBI whenever they apply for a banking license. They said that since they're already being inspected regularly by the Reserve Bank of India and these companies are also submitting regular returns, the process of due diligence should not take this long, and that their application should be processed quicker. They also sought access to databases such as the Central Repository for Large Credit, as well as GST databases and Aadhaar databases, so that their lending business can improve better.
Okay. The government and the RBI may be one step closer to resolving the biggest bone of contention between them as well. The central bank has constituted a committee to review its economic capital framework. Vichy, while you're with us, who all are on this committee and what's the significance now?
the Reserve Bank of India, in consultation with the Government of India, have created a new committee for the economic capital framework. This committee will be headed by former RBI Governor Bimal Jalan, will also include former Deputy Governor Rakesh Mohan, two RBI Central Board members, Subhash Chandra Garg from the government, as well as the current RBI Deputy Governor N.S. Vishwanathan. The terms of reference for this committee include assessing the various reserves that are being maintained by the Reserve Bank of India currently, provisions reserves as well as any kind of buffers that it maintains, and whether the amount is in excess of a certain limit that will be prescribed by this very committee. If it is in excess of this limit, then what should be done with those excess funds will also be recommended by this committee. It is expected that the committee will submit its report within 90 days of its first meeting. After that, the government and the RBI will be able to take a more educated decision on what to do with these excess funds. The need for this committee has risen because there has been a kind of a standoff between the RBI and the government regarding some excess funds that are being maintained by the RBI, which the RBI has refused to hand over to the government. Especially since the recent departure of RBI Governor Urjit Patel, this matter has been in considerable limelight, and therefore this committee's work will be very important.
Okay, let's wait and watch. And interesting move. Frankly, difficult to find fault with the composition of the committee as well, and this should only be heartening news, to be honest. Let's wait and watch. Okay, on to some analytical pieces after news. Amidst rising demand for electricity in India, many power producers have reported a marginal decline in plant utilization levels. Worse, merchant power rates in the spot market also continue to fall. Yatin Mota has gone through the data released by the Central Electricity Authority to make sense of the situation. Well, Yatin, there might be demand. It's not quite translating into improved numbers or improved financials for the industry as well.
Yeah, clearly, Neeraj, and of course, as you were mentioning about the merchant power rates, they also come down on an average. At this point in time, let's talk about the power data which has come in from the CEA, which is the Central Electricity Authority. Now, the overall domestic demand for the month of November has grown nearly 5% on a year-on-year basis, and more importantly, till November year-to-date 2018, which is the financial year, the growth has been 6.3%. So, on the growth side, of course, there have been no challenges. The government's electrification spree, especially in rural areas, has clearly been aiding the demand, especially in the rural states. Now, if you look at the peak demand also, which is where merchant power rates really work, there also we have seen a 7.3% growth. However, despite that peak demand being higher, spot merchant tariff rates have dropped to a level of 3.6 rupees per unit on the Indian Energy Exchange, and this is from a level of nearly 4.5 rupee, which was there, somewhere middle of this year. But still, 3.6 rupees per unit is a decent rate for companies like JSW Energy, which have been struggling to get long-term power purchase agreement. Now, if you look at the regional breakup of India, we have the northern markets which have grown by 4.4%. West, of course, it is urbanized, so the growth has been less. However, the eastern markets, wherein states like Bihar and Odisha are there, wherein we have seen strong rural electrification, there the growth has been nearly 12%. So clearly, this has been on the back of strong government initiative regarding rural electrification, which has led to this particular growth. More importantly, if you look at the state-wise, top 4 states, Odisha, Chhattisgarh, and Bihar, dominated by rural, markets, which have seen growth. We have seen almost a 20% growth in the state of Odisha. For Bihar and Chhattisgarh, it has been nearly 16 to 18%. However, despite this growth, we have seen the plant load factor or the utilization for power plants not being that great. In fact, if you look at the coal PLF, that has come down to a level of 60% from almost a peak of 65%. Gas-based power plants clearly are struggling when the capacity utilization is only 22%. However, if you look at the key players and the key plants as to how really the capacity utilization shaped up on a year-on-year basis, NTPC's thermal power generation has seen a PLF of nearly 84%, down 5% on a year-on-year basis. It's 5% higher year-on-year basis. If you look at the Adani Mundra power project, the utilization has dropped significantly from a level of 65%. The utilization has dropped to a level of 51%. Tata Power Mundra power plant is more or less stable at 76% kind of a utilization rate. What has improved really is CSE's Kolkata unit, wherein the utilization has improved by 2%, and similar is the case with JSW's Vijayanagar plant, wherein the capacity utilization is more or less around that 45-47% kind of a mark. However, the challenge probably the industry is talking about is lack of coal availability. The Coal India reported only a 0.7% growth in dispatches on a year-on-year basis for the month of November. However, last year, same period, the dispatches growth was nearly 10%. So probably, the coal stocks have been depleted. Probably if Coal India ramps up production, better coal availability will further push up the utilization as well as plant availability factors for most of these power plants.
Well, interesting, Yatin. Thanks for putting that into perspective. And while it's not good news for power companies, is it good news for aviation companies? Now, rising jet fuel prices, moderation in passenger traffic growth, deep discounting. I think if you read all of this, Indian Airlines have not had it easy in the last few months. But a recent report put out by Kotak Securities suggests that they have finally decided to bite the bullet and hike prices. Sameet Sakar is here. The details. And while it can't be good news for consumers, it's certainly a much needed shot in the arm if indeed it's true.
Well, yes, Indigo, aviation companies did need this. Now, Kotak came out with this note where they're expecting a steady rise in ticket prices going forward for the aviation industry. Now, they believe that earlier airline companies were using pricing as a technique to grab travel market share from Indian Railways, and they have been successful in doing so far. If you see the air travel market share, now that has increased considerably when it comes to incremental travel volumes for aviation industry. From 28% in 2014, it has now increased to 81% in 2018. Now, this is only for the incremental travel volumes that we are talking about. And if you see the air travel volume numbers, now you can clearly see a divergent trend in that part. Now, for long distance AC rail over 2010 to 2014, the volume growth was around 13% compounded annual growth rate, and for domestic air travel it was around 9%. But from 2015 to 2019, the expected growth rate is around 19% for domestic air travel, while for long distance AC rail the travel growth is expected to be only 5%. Now, this increase in market share and increase in higher growth volumes will definitely help the aviation industry, and more importantly, it will help Indigo, because if we see that company's market share in the aviation industry has increased from 28% in 2014 to close to 43% as of November 2018. So that company will benefit the most because of this rise in market share and because of higher growth seen in air travel volumes. Now, there is no doubt that a steady rise in ticket prices would be the best and a profitable way for the aviation industry to go forward, because the last time when we saw these aviation companies to indulge in price wars, they had reported massive losses. Now, if you see in the last 3 quarters, they have reported the 3 listed airline companies have reported losses of more than 4,800 crore rupees in the last 3 quarters, and that is because of price wars and because of higher cost that they had reported such big losses. Now, the only challenge that the industry would see because of this higher higher ticket prices going forward would be lower passenger growth, and we are seeing some signs of this so far in Q3. So if you see in October 2018, the passenger growth was only 13%, and in the holiday month of November 2018, the passenger growth was only 11%. That was the slowest in at least the last 4 years. Now, Kotak believes that this is a sign that there has been moderation and gains of incremental market share from the Indian Railways for the aviation industry, and that's the reason the passenger growth has slowed down. However, this would definitely impact the industry because they have placed large aircraft orders going forward. Now, Indigo has placed an aircraft order of 430 planes. Jet Group has placed an order of around 225 planes. SpiceJet has placed an order of 155, while Go Air has placed an order of 144. With a slowdown in passenger growth and higher aircraft orders, their occupancies would definitely come down. Certainly, significantly, if you see going forward. That's what the only challenge that the aviation industry now currently sees.
Okay, thanks, Sameet. Thanks for putting that into perspective. So that's with regards to aviation, and let's see. There's been some respite for shareholders of Interglobe Aviation, at least. Not that it's translated into some of the others. Jet Airways was up and active in trade yesterday. I don't know if people are factoring in the fact that maybe heightened ticket prices coupled with lower crude prices could all aid these companies. There's some traction in the stock prices for these stocks. Let's see if there is more over the course of the next few days. Okay, the last piece on first word today. Now remember, yesterday we got you what 3 or 4 global brokerages had to say at the start of 2018 and how some of the model portfolios have shaped up. Today, Darshan turns his attention to another 3 and their performances or their predictions and how those predictions have performed in the calendar. Darshan, which are the 3 brokerages that you've picked up today?
Yeah, so Credit Suisse is something that we picked up. We picked up Morgan Stanley, we picked up Bank of America, Merrill Lynch. So let's see what they have to say. So basically, again, Credit Suisse report was released in Jan 18, and basically they just spoke about 3 companies in which they believe investment should happen. The actual returns of the large caps that they were was a negative 7%, and they picked up leaders in the industry, and they were among the worst performers over a 5-year period, not necessarily in the near term, but if you take a look at the 5 years, these 3 companies have underperformed. Now let's take a look at which the companies they had. So L&T is something that they had to given a buy, so there they got a return of 7%. M&M is something that they gave a return of 4%, and Tata Steel is something they lost out significantly. It is down almost 33%. So that's something in which Credit Suisse lost out. So overall, the return on the portfolio on account of Tata Steel was down almost 7% in trade. So this is what Credit Suisse had to say. The other brokerage that we want to talk about is Bank of America Merrill Lynch. The report was released on 4th of December 2017. The Sensex target that they had given was 32,000. So basically, the Sensex target has been met. Basically, the theme of the entire report was they were bullish on earnings and growth that will come in, and less on multiples that they came in. The large cap returns actually for them was a negative 10%, but surprisingly, the mid cap returns gave a positive return of almost 16%. Now let's take a look at their portfolio, which were the stocks that they had recommended on 4th of December. On the large cap front, Yes Bank was something that dented their performance significantly. It was down 42%. HDFC Bank gave them decent returns. L&T gave them decent returns. NTPC was another counter which actually came in much below what the price was. ITC didn't move much. The other stocks that they had recommended and actually dented was Tata Motors. Tata Motors has been down significantly. Bharti Airtel was down in trade, and Tata Steel. So because of these 4 large counters that they had in their portfolio which they had recommended, the overall portfolio was down in trade. Among the other mid cap counters that they had recommended, these are the other large caps that they had. Surprisingly, the other big dent came in when they were negative on TCS. TCS has been a marked outperformer, and that is where they lost almost 44%. The HPCL sell call was something that they got right at this point of time. Among the mid caps that they actually had, only 3 mid caps, and they did well because of the sell call they had on SAIL and DLF, and that worked for them. Godrej Properties gave them a negative return of 6%. And finally, the last portfolio that we want to talk about is Morgan Stanley. Again, 35,700 expectation on the Sensex. They haven't been able to give positive returns this time around. Both the large cap and the mid cap portfolios have given negative returns for both for Morgan Stanley. Let's take a look at the portfolio first. Let's take a look at the large cap portfolio. What they did well was JSW Steel and Asian Paints did well. The auto names didn't work for them. Maruti and Bajaj Auto, both of them were down in trade, and that is why the portfolio turned negative. The other counters in which they lost significantly was Z, which was down 23%. HDFC Bank gave them market return. So that's the large cap portfolio. Not the best of performance. Basically, just saying where it was on account of them. As far as the mid cap portfolio is concerned, Cummins India was down 8% in trade, and M&M Financial from the buy call was up 5%. So pretty much market return. But overall, if you're looking at most of the brokerages that we have covered, I think mid caps overall have not done well. The sell calls have worked well. So whichever brokerages gave sell calls or underperform calls, they have actually managed to work. And mid caps across the board have not done well. And in fact, all the brokerages, most of them have actually given subpar return as compared to the benchmark indices.
Well, Darshan, thanks for putting that into perspective. It's part 2, and I think we'll bring one more part to all the oral brokerages and how their performance has been. And you'll find some mention about it on the website or in the weekend as well. But that's all that we have for first word in the session today. Lots more lined up on Indian Open though. We talk about whether demand is slowing for cars and two-wheelers in particular, and whether it's reflecting in the vehicle finance market as well. Madhu Alexiouse of Muthoot Capital Services would be joining in to speak about that. And everything from global commodity prices to Vedanta's expansion plans with Chairman Anil Agarwal. But right after this break, a full tilt towards the day's trade.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
or maybe they'll lay the foundation for something new? I hope my ideas survive.
I've had some great ones.
And there's still
So much left to do.
who knows what life will bring.
The road is long.
The journey full of promise.
The pursuit
Only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. Let's take a look at how the Asian markets are faring at this point. A fair bit of green on the screen, especially for the Nikkei, and it's held on. So 722. In fact, it's only strengthened as the course of the day has gone by. Shanghai and Hang Seng, well, about two-thirds of a percent to three-quarters of a percent for both of those indices respectively. And the SGX Nifty is steady at that third of a percent kind of a move at 10,800. Remember, we had a bit of a move in trade yesterday as well. We ended about a percent higher, so some bit of a move has happened already. But Europe might open very well, and that might only augur well for the Indian markets. But it's expiry day, so volatility to be anticipated, high volumes to be anticipated. Let's take a look at the positioning of the Indian markets ahead of the expiry day. Darshan Mehta Johnson with that. Darshan, good morning.
Good morning. And the SGX Nifty is doing well. We had the 10,800 mark in trade. It's come up from the highs of the day. Nevertheless, as far as Asia is concerned, we probably will have an opening start on the SGX Nifty. What happened in trade yesterday? Let's pull up the Nifty. The Nifty managed to rally. If you're looking at the rollovers at 61% above what it was average, but remember, the rollovers are not on the long side this time around. They're on the short side. We were up almost 0.6%, but remember, we rallied almost 200 points from the day's low. As far as the Nifty Bank is concerned, the rollovers are in par with what it was over the past few series, but the Nifty Bank is looking much stronger than the Nifty at this point of time. Where are positions taken? I think 10,911,000 are the big resistance that we're looking at. So call writers are active from 10,800 to high levels, and put writers from 10,700 to lower levels in trade. Probably because of expiry today, we can expect an option expiry in and around the 10,800 mark in trade. So that's the trend that we are seeing. Even in trade yesterday, since the market did manage to rally, put writers became active at lower levels, but at higher levels because of the volatility coming off, positions were squared off and being rolled over into the next series. Only one stock is there in the F&O ban at this point of time, and that is Adani Power. Adani Enterprises comes out of the F&O ban. Both the Nifty PCR, the Bank Nifty PCR managed to inch up given the fact that we had a strong rebound that happened in the market, and some of the stocks that you need to watch out for, counters which managed to gain significantly. Dabur India had open interest built up of 46%, Nestle had open interest built up of 45%, that too on the short side. TCS did manage to fall in trade. Equitas and Shriram Transport did manage to rally, and the counters which saw open interest decline, and all of them did manage to gain, included counters like Wockhardt, Karnataka Bank, Ambuja Cements, Godfrey Phillips and GSFC in trade.
Okay, we'll watch out for some of these. Darshan, thanks for putting that into perspective. Parthiv Shah, Director at TRACOM Stockbrokers, with us on the show. Parthiv, good having you. Thanks much for joining in. If indeed the momentum doesn't fade away, Parthiv, do you reckon that we are in a sweet spot, or there could be some corrections come the month of January? Because after a 17% down move or 19% down move in S&P, sure, it has rebounded a bit, but nothing to say that it will last.
Good morning, Neeraj. Actually, it's quite surprising. Who would have known that in the week of Christmas and into holidays, I think the Dow Jones would have moments and swings that we saw in the last week, though with thin volumes, but still, I think nonetheless, I think does keep a lot of nerves on the edge. But nonetheless, I think let me specifically talk about the Indian markets. My sense is that if I go back into history, I think 2017 was a year where we saw a lot of long build-up, a lot of positions in the market, a lot of new PMSs flourishing, building the AUMs, and we saw decent returns. 2018 was a year where no doubt most of the consensus was predicting would not be as good a year as 2017, but certainly I think it was a very, very painful year. And I think probably my senses, and probably going just on a probabilistic view, I think the pain that we have seen in 2018, the same might not be repeated in 2019, despite the fact that we are probably going to see things like the election outcome, some more volatility to go thanks to the developed markets like US and Europe. But still, my sense is 2019 will be a lot better year. And I think I'm saying this predominantly because even in case of earnings, I think probably the best time to predict earnings is at the time when everyone has given up. Because I think ever since 2017, we had long build up thinking that 2018 will be a great year of earnings, but that did not happen. Now probably in 2019, most of the consensus is going slightly tepid in terms of the earnings growth. Instead of that 20%, now the consensus is talking about 12 to 14%. So my sense is 2019 could be a year of surprise. And I think certainly more importantly, after the election outcome, irrespective of whatever comes out of the elections, we are very upbeat on the market. So I think what we are suggesting clients is that don't worry about the macro swings in the international markets. These are great times to use volatility to your advantage, build up a good, strong, resilient portfolios where companies are operating at high capacity utilization and they are on the verge of a capex, and that capex would not take place with bank borrowings but through internal cash generation, internal accruals. So I think that is a theme to play out, and I think a lot of stocks are available which are at a discount of 20-30% from its peak valuation, which gives a lot of comfort to own them over the next 2 to 3 years at least.
Okay, we'll talk about where are you finding these companies as well, Parthiv. I first want to talk about some of the movers and shakers in the near term or in stocks in focus. Now, Kotak came out with a note saying that airline companies have finally gone ahead and hiked prices. Crude coming off, despite the small bounce back yesterday, the fact that Brent is below 60 should also augur well. Is there merit in trying to freshly invest into another aviation name, or would you leave that out and instead focus on the pack that you just spoke about?
See, Neeraj, I think I do remember we had a discussion regarding the aviation stocks, and one rationale that I had was regarding a stock like Interglobe Aviation. One was always wondering why that despite having almost 42% market share, almost being in a sector where the growth is extremely good, this company is not having a pricing power. And one strategy that we could only envisage was the fact that they were trying to ruin the competition, and kind of they were successful. We did see the return ratios of the next best competitor like SpiceJet come down, but I think more importantly, a player like Jet Airlines, I think struggling, which is always a good thing. It's more like a consolidation in the industry. And now with slowly and gradually the pricing power coming back, my sense is in the year 2019, I think Interglobe Aviation as a company with all its efficiencies that it brings, and also the change in the fleet, especially of the neo jets, which are 15% more fuel efficient, I think the return ratios and all the fundamental metrics would look lot better if one even looks into year-on-year basis. So I think especially with the way oil has behaved and the range that we are forecasting, that oil could stay anywhere between say $50 to $70, which is a sweet spot for a company like Interglobe Aviation, where the pricing power is slowly and gradually coming back. I think not a bad idea to own a stock like Interglobe Aviation, at least with the visibility of next 1 year.
Interesting. Do watch out for Interglobe Aviation. That's something that Parthiv believes could be worth owning. Let's talk about some stocks in news as well. And before I go to Parthiv for that, let me go across to our research team to try and figure out what are the ones that are likely to react in the session today. Some brokerage notes. I believe there is one very interesting one on telecom as well. So Sameet as well as Nikki join in to talk about that. Good morning to both of you. Sameet, of course, good morning again. But let's first start off with the stocks in news.
I'm going to start off with that, Sun Pharmaceutical, where the company has got awarded preliminary injunctive relief by US Federal Court, which has prohibited the defendants Biofrontera from using the subsidiaries' proprietary trade secret information. That's a positive development coming in for Sun Pharmaceuticals. Man Industry, where SEBI has imposed a 10 crore fine on 3 of the promoters for not opening or not for failing to make an open offer, given that the promoter's stake increased from 51% to 55% back in the period of June to September 2000 quarter, which made a case for an open offer. HUL, on back of the clarification where it said that it's going to be considering various legal options, and said that there was no fixed methodology determined by National Anti-Profiteering Authority while deciding upon the unfair profitability which has been imposed, the charges for which have been imposed on the company. NTPC, which has got an investment approval coming in for 2 of its plants, 140 megawatt and 120 megawatt. Simco, where the promoter Titagra Wagon is expected to sell more than 5.5% equity in the span of 2 days, and comes at a floor price of 38 per share, which implies a discount of more than 11% as compared to the market price that we saw yesterday. And last in the list that we're tracking this morning is SBI Life Insurance, where the Carlyle GIC set, the ET report suggested that the Carlyle GIC is set to acquire more than 10% equity in the company for a consideration of around 5,200 odd crore.
Do watch out for SBI Life as well. Thanks a lot for that, Nikki. Sameet, what about the brokerage notes?
Well, a couple of them. First one is on the Indian telecom sector, where Motilal Oswal says that the earnings pressure would still persist on this sector going forward, and that is a revival looks bleak, as there have been no signs of improvement when it comes to the average revenue per user of the sector. Now, as earnings revival looks bleak, the telecom companies would continue to burn more cash, which would further lead to equity dilution and asset sales, says the brokerage. Now, for Bharti Airtel, the brokerage says that the company's cash burn and leverage situation is now at an uncomfortable level, and to address this, the company has taken up various asset sale and various stake sale and asset monetization plans, which would lower its leverage ratio, that is net debt to EBITDA, to close to 3 times in future. Now, for Vodafone Idea, the company says that the recent equity dilution plans of the company would only help the company with the cash to sustain for around next 6 to 8 quarters, and that is because of its rising debt levels and its inability to service this debt through its operations. And the second we have is Edelweiss on metals. Now, according to the brokerage, now aluminium prices on the London Metal Exchange have slipped below $1,900 per ton, which is for the first time since August 2017. Now, this is because of a weak Chinese demand seen in the second half of calendar year 2018, which could persist in 2019 as well, says the brokerage. Now, lower than expected aluminium demand growth, flattening of cost curve and rising trade tensions are the key risk for aluminium prices in 2019, says the brokerage. Lastly, in India, the brokerage prefers Hindalco in the non-ferrous space, and that is because its earnings are largely immune to volatility seen in the aluminium prices, says the brokerage.
Let's wait and watch. Thanks a lot for that, Nikki, as well as Sameet. Parthiv, couple of interesting names there. I think a lot of people would be tempted or some people could be tempted looking at the telcos coming off so rapidly that it's a business that is here to stay. Why not go out and buy into Vodafone Idea, for example? But brokerage note after brokerage note and private equity conversation after private equity conversation seems to suggest that there's some serious problem out there. And for an equity investor, the value may not be there. In fact, it might only get eroded over a period of time. Where are you on this debate? What do you do with the Vodafone Idea at 37 rupees?
See, one interesting viewpoint, Neeraj, is that Indian telecom market certainly bodes well for a case study at Harvard Business School, because none of the countries where the telecom sector has grown have we ever seen anything like a price disruption that we have seen twice in our country. I remember the first time the price disruption in terms of the price going down by at least 60 to 70% was during the launch of Reliance Infocom. And I think the second disruption is post the Reliance Jio regime. So I think certainly this is a case in itself, and there has been competition internationally of many players, but never ever the competition has been so damn disruptive that, you know, even a MNC play like Vodafone and a big player like Idea had to come together, merge, and yet they are struggling and not trying to, still trying to figure out how they will raise capital, dilute equity and all that sorts. But nonetheless, what my sense is that, you know, we have already seen the worst in the telecom sector, and now probably would be the time where probably we will start seeing some sort of pricing power coming back, because even I think it's not possible for Reliance Jio to eternally keep prices so low, because other overhead costs are also going up, and I think they would also land up at times struggling with the spectrum sharing trading mechanism. So what we believe is that I think come 2019 and year ahead, I think we'll start seeing at least something like a 15 to 20% better data ARPUs, and that will not only happen for Reliance Jio, it is going to happen for the entire industry. So since last 2 years, the industry has been struggling to how to retain their customers, for which they had to pay a heavy price. Return ratios were impacted, but now they'll see the pricing power coming back. And one good stock that I feel a pure telecom play would be Bharti Airtel. I would still wait for Vodafone Idea to settle down, but Bharti Airtel I think would be the best play.
Okay, so Bharti Airtel is a preferred play for Parthiv. I would want him to comment on the next set of stocks as well, but and that's the railway companies, in particular because of this piece of news. Titagarh Wagons is expected to sell or set to sell 5.64% stake in Simco. Remember, the promoter entity is likely to participate in a two-day OFS that opens today. Joining us on the phone line is Umesh Chaudhary, the Vice Chairman and Managing Director at Titagarh Wagons. Umesh, good morning. Thanks so much for joining in. This is Neeraj here. Why this decision?
No, this is for statutory compliances. So when we had Titagarh Wagons was holding more than the threshold of 75% limit in Simco. So according to the SEBI regulations, we need to come down to 75%. And this is basically only in order to enable the company to achieve that compliance.
Okay. Any gauge or any talks with the people who are executing it about the demand that exists? Because I mean, you know, frankly, a lot of pockets which dependent on government spend are falling slightly out of favor currently.
Yeah, so we've, you know, it's a very small stake sale. If you look at the value in value terms, it's hardly anything. So we have really not gone into that much of details. It's more like a statutory compliance which is being executed by the respective people. So I'm sure that it's a very, very small event, I would say, in terms of quantum of the value.
Okay, just one final question then, Umesh, and that is on how is Simco as a business looking? Because I remember we spoke about Titagarh Wagons because you received that large order and things were starting to look up. What about Simco, which I believe is the manufacturing of wagons as well? How is business looking like?
So Simco also has a good order book now, Neeraj. Simco has a good order book for the wagons and for some of the other products. The defense business in Simco has not looked up as much as we would have liked it to, because as you just said a few minutes ago, the order placements and the traction in the defense business has not really been as we were all expecting it to be. But I mean, I'm sure it's a matter of time. You know, it is something that will come up at some time or the other. Simco has the necessary capabilities and the infrastructure. So definitely it will have that edge over the others as soon as the business starts coming up.
Okay, Umesh, thank you so much for joining us with that necessary clarification, and season's greetings to you.
Thank you. Same to you.
Thank you, Umesh. That's the Vice Chairman Managing Director. Statutory compliance needed to bring the promoter stake down. Don't expect there to be any kind of a big pairing because the quantum of supply is very low for a Simco. However, because it's slated to happen at 38 rupees, the price could well fall down to that level. Parthiv, just one word on some of these, government spend dependent entities, be it defense, be it railways, etc., private companies, but largely dependent or majorly dependent on the government spend. Are they completely out of favor, or is there a pocket or two out there or a stock or two out there which is getting orders and looks favorable to buy at a time when there are enough and more private entities not dependent on government orders which are also looking interesting?
Very frankly, I think case in point, stocks like Titagra Wagons, Texmaco Rail, I think all these stocks were supposed to do extremely well with especially a lot of capex turnaround in the railway sector. And let me be very frank, I think our channel checks does suggest a lot of work is happening in the railway sector in terms of execution, more and more projects in the pipeline, and decent financial health in terms of even people like LIC trying to support the cause of the railways. Yet, I think these stocks haven't done great in terms of the earnings trajectory or anything in the pipeline which suggests that these stocks would get re-rated. And a stock like Titagra Wagon talking about, coming into another very capex heavy segment, which is like shipping. I personally feel it's best to avoid these companies because these companies are at the best positional trades based on the news and the budget and what the railway sector would bring in terms of the capex. But never ever they have sustainably created good shareholder value. Rather on decline. I think one PSU stock, and we are very wary of public sector companies, but RITES would be a company, thanks to the fantastic business model, asset light, and being a consultant and earning very high margins, decent free cash flow generation. RITES would be one company where on any declines, I think I believe that this company can give very good returns along with very good dividend payout.
Well, that's the second recommendation for RITES in 2 days. Yesterday, Avinash Gorakshekar mentioned that he would believe that he believes that RITES is an interesting name to buy into. Parthiv believes RITES is a company that one can look at as well. However, what we will do is ask Parthiv about the first pocket of stocks, which is the companies that he believes are on the cusp of big earnings moves and capex either behind us or not that there is very large capex in front of us. But we'll talk about that in a bit. It's 8:46. So time now to focus a bit on technicals and derivatives. Expiry day, of course. Important day to get in. Sameet Chavan, he's Chief Technical and Derivatives Analyst at Angel Broking, with us on the show. Sameet, always good having you. Thanks much for joining in. Simple question. What do you expect the expiry to be like today?
Morning, Neeraj. I mean, looking at yesterday's V-shaped recovery, nearly 200 points from day's low, that clearly indicates that, at least for this expiry, 10,700, 10,650 is likely to be a very strong support, and we expect expiries to happen around 10,800 or beyond 10,800 as well. The kind of, massing unwinding that we saw in some of the at the money and slightly out of the money strikes, so that is quite encouraging, and the kind of move that we saw in banking index, that has clearly set the tone for next leg of the rally. So from here on, we expect that 10,600, 10,550 has become a near-term base now, and from here on we would expect a decent up move. Probably next couple of days we won't be surprised to see Nifty heading towards 10,850, 10,900.
Rolls have been high too, Parthiv, I believe. Market-wide rollovers, Nifty rollovers, much higher than what the 3-month averages have been. Rather, Sameet, excuse me, the question was for you.
Yes, the kind of activity that we saw on the rollover front also yesterday, that was quite encouraging. And from here on, we would expect some kind of longs getting added. And yesterday, in the latter half, we saw short covering moves in index as well. So we expect extension of this move. And as I said, the banking index is the one heavyweight pocket that is clearly providing some kind of conviction. And apart from that, mid cap index, which has been clearly outperforming as compared to benchmark indices. So all in all, we expect now 10,550, 10,600 to become a base. And from here on, we would expect a good move.
Okay, mind you. If it just, a couple of pockets that I thought were very interesting from a rolls perspective. Cement, I think the rollovers have picked up much higher than what you usually see, or what at least I've seen over the last couple of months. So do watch out for those stocks as well, and we'll talk to Sameet Chavan about them. Yesterday, a couple of media names. Z was bouncing back. PVR has been on a bit of a roll. Media as a pocket has not seen bad rollovers too. So do watch out for those names too. And as I said, we'll talk about them with Sameet Chavan. But before I talk about my stocks or my questions with him, I want to get his stock ideas for today's session. Sameet, two or three recommendations, and do qualify whether they are to be squared before the expiry happens today, or are they positional in nature?
These are clearly positional calls. The kind of move that we saw in the mid-cap index yesterday, also a great recovery from lower levels. So as I said, we would rather focus more on individual pockets, especially from the mid-cap space. BML is the one stock that we have been closely tracking since last couple of months, and we have been advising this stock to our clients since the level of 650 on any meaningful dip. So yesterday's correction has also got bought into in this counter, and the stock has now is now trading around its important levels. So from here on, we would expect BML to extend this rally. It has already seen a great move in last couple of months, and from here on we would expect another leg of rally. So this particular stock is heading towards 950, which would be a near-term target. One can go long with a stop loss of 874. Apart from this, a lot of NBFC stocks did well. During the latter part yesterday, we saw massive rally in most of these counters, high beta counters. So Bajaj Finance, that has clearly picked up strong momentum in last couple of hours and has managed to close around its recent highs. The kind of price and volume activity we saw, we expect this breakout to happen quite soon, and hence we recommend Bajaj Finance for a target of 6,800. It can be bought with a stop loss of 60-90.
Can I ask you, since we're on the topic, what about Bajaj Finance then? Finserv won't move unless finance moves.
See, in last 3-4 days, we saw consolidation in Bajaj Finance, so we would expect, some kind of catch-up move from Bajaj Finance, because Bajaj Finance has already moved, so it is outperforming its counter now, peer counter now. So we expect, once Bajaj Finance moves beyond 2,600, so that's a trigger point for Bajaj Finance, we could see a sharp move in Bajaj Finance as well.
Okay. Wait and watch, but Finserv is essentially Sameet's idea, not Bajaj Finance. Bajaj Finserv is the one that he is betting on currently. Okay, 8:50, time now to get you our special segment Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. The stock we're tracking is Graphite India, and a buy signal coming in on the back of the stochastic indicator. But let's first try and understand what it is. The stochastic is basically a trend following momentum indicator. It identifies when a price move is overextended, and it measures the current price relative to the highest highs and highest lows. How do you interpret it? What are the levels above 80 and oversold is below 20. Any crossover indicates a buy or a sell signal, which is in today's case for Graphite India. So bring the chart up. The blue line over here, that is the stochastic line, and that has managed to cross above the white line to create a bullish crossover. Now, what we saw in yesterday's day of trade, and that is very important to note, because on the back of really very heavy volumes, we saw the stock fall as much as 7% in yesterday's day of trade, but it saw a swift recovery and ended the day only marginally in the red. So clearly the momentum seems to be on the upside, that we could see from these levels a move on the higher side, because even on the stochastics levels, the stock is oversold the most in the last 3 months, and there is possibly a reversal happening on the charts.
Okay, and how well has this worked for Graphite India in particular in the past, Yash?
So Neeraj, 2 out of the last 3 times that the indicator has hit, it would have given you positive returns on an average of close to 8% over the next 1 month.
Okay, Yash, thanks for putting that into perspective. So that's Graphite India for you. Stochastics indicate a buy. Remember, HEG and Graphite India have come off quite a bit. Actually, it's good that we have Parthiv, because he looks at these companies very, very closely, knows them as well as anybody I know. Parthiv, Graphite India and HEG, I think a lot of murmurs, Parthiv, around whether the China electrode market and the implications thereof have an impact on HEG or Graphite India or no. A lot of chat around it. What's your sense, the pullback that we've seen in these stocks, and fundamentally, is there merit in trying to own them, or would you believe that they should fall a bit because of what's happening globally?
See, frankly, Neeraj, I think one reason why we have seen these stocks correct from their highs, and despite the fact that if I were to look into their FY20 valuations, they're not at all expensive. They're quoting at around 3-4 times EV EBITDA, which is not expensive for now such specialty names. In the past, yes, one could say these were commodity stocks. And there's a huge difference in terms of the quality of the high, ultra high graphite electrodes that these two companies make vis-a-vis whatever chatter is in terms of China expanding their capacity there. And also, I think all the capacity expansion never ever comes with a steady supply of needle coke. And one of the big suppliers of needle coke being ConocoPhillips, who is debottlenecking its capacities. So my sense is that I think there's a lot of fear about the overcapacity in the cycle coming to an end. But structurally, still I feel over the next 2 years, there is at least a very, very strong visibility. Okay, if not making margins of around 65% EBITDA level, which they were making, even if they were to make 50% EBITDA margin, which is historical high, I am very comfortable, I think, owning these stocks on dips, especially Graphite India. And more importantly, I think these two companies still cater to almost 22% of the global share. And China as yet has only converted around 6% of its capacity into electric arc furnace. And all the scrap that they are producing thanks to the previous capacity build up, they are now looking to have more capacities using scrap, which is only through electric arc furnace, which requires graphite electrodes. So my sense is China, due to the environmental thing, is still in place. Not all the old blast furnaces will come back. They are not going to get relocated. So I think the demand for the products of these companies is going to be there. And Graphite India is very smartly bought a company which is into very high specialty graphite based products. So that could be an interesting concept going ahead. But yes, I think at around 700, 750 levels, Graphite India would be a very good buy in my opinion.
Would you buy a Graphite India at 750 or would you buy HEG at 3600?
At current levels, I think I prefer Graphite India purely based on the valuation and the strategy that the management has going ahead. So I think Graphite India would be a better bet in my opinion as compared to HEG.
Okay. Nevertheless, some key movers in trade yesterday, and Sameet, Chavan, want to come to you on some of these aviation names. We discussed them fundamentally from the perspective of derivatives or the charts, and Interglobe and a Jet Airways.
No, clearly within this space, Indigo has been our preferred bet. The kind of massive volatility that we saw in Jet Airways, so we are avoiding this counter. But yes, the kind of move that we saw in the recent past is quite encouraging. But if we have to pick any stock within the aviation space, we would certainly go with the stable one, that is Indigo. This stock has already given massive recovery from low levels in last 1.5 months. A couple of weeks back, there was a decisive breakout seen on charts around 1050, 1080, and if you look at the volume activity, it has picked up substantially in the recent past. In last 3-4 days, yes, the stocks are consolidating. From here on, we would expect a bit of mild profit booking happening in Indigo, but around 1100, 1080, it becomes a good buy. We would expect the stock heading towards 1230, 1250 over the next few weeks.
Okay, so good buy. Some more upsides is what Sameet Chavan believes we could see in Interglobe Aviation. Couple of stocks that were very active today. One of them was Brigade Enterprises. The stock was up about 14%, 13.5%, 14%. Well, I think a large move also happened post the management, and they spoke to us about how they believed that the estimates that the brokerage had put out were a bit conservative. He believed that the revenues would grow much faster. Motilal Oswal's target price was about 280 or 284 thereabouts. A stock went up 14% in trade yesterday. Parthiv, any thoughts here? Brigade, or if not Brigade, any of the other real estate names that you are comfortable putting fresh money to work in, and why?
Sure, Vikas. So I think real estate space, as we have even discussed in the past, we have always had a very, very selective strategy. And yes, this is a very, very important sector, not only for India, but any country we talk of. And luckily or coincidentally, in a country like India, in the stock markets, I think the real estate sector as a whole, in terms of the entire market cap we talk of, is very, very minuscule. So in that sense, yes, this sector over the next 5 years will bring in a lot of multi-baggers. And I think a couple of stocks that we feel very comfortable owning doing, though they might have not created substantial value in a lackluster sector like that of real estate over the last 5 years. But now going ahead with all the changes thanks to RERA, I think a stock like Godrej Properties and Mahindra Life Spaces, I think these will be the two stocks that I would love to own. A couple of reasons. I think Godrej, we know, is a very, very strong brand play, wherein I think they've always believed in an asset-light model. They've been very selective in the projects that they target. They're geographically well spread. We are somehow not very big fan of companies whose concentration lies in, say, only pockets like Bangalore or Mumbai. I think as compared to that, both Godrej Properties and Mahindra Life, they have Mahindra Life Spaces, they are very well diversified geographically, which is always a natural hedge. And certainly, I think their balance sheets are not at all stretched. And all the new projects that they put in, I think, is after a lot of consideration, not taking too much of debt. And I think especially Mahindra Life is focusing on even the affordable housing segment, which is also a good, nice balance to have in the portfolio. So I think in real estate, these will be the two stocks we would like to own over the next 3 to 5 years.
Okay, watch out for these names. We will, of course, talk about Brigade on the charts as well, because it was a very active stock in trade yesterday, but just a few minutes away from market pre-open session. So let's dwell on that for a bit. Remember, it seems that it's evident that we'll start off reasonably okay, about a third of 1% or thereabouts, if the SGX is to be believed. But the Qs across the world are not too bad. Nikkei is up about 722 points, and it stayed like those levels. At those levels, maybe Hang Seng and Shanghai have come off a little bit from the levels that they're trading at, but still in the green. SGX, we've had a bit of a rally already yesterday. Keep that at the back of your mind when you're looking at the Asian screen. But Europe opening positively and short covering in Europe could be a factor to monitor today as well. But here's how we're starting off. All over the place right now. Let's give these rates a chance to settle. I think there's an unnatural 10% downtick in Axis Bank, for example, 7.5% or thereabouts. So I think all of those rates, and already changing now 2.5%. So these rates will change. Watch out for BPHP IOC. Maybe they will react a little bit simply because of the crude price uptick, and after having an upside for the last few days, maybe there's a bit of a pullback or a trading profit booking that is happening in BPHP IOC. Let's wait and watch what happens. Then Sun Pharma, a fair deeply crack in trade yesterday. Looks like it'll start off positively today. The news is okay. The news is not really a big positive. It is a positive, but not really a dramatically big positive. Sun Pharma right now is reacting. I would reckon that it will probably not be a 6% up move, but let's wait and watch. You never say never. Tata Steel and Infosys look like starting off okay. Yes Bank looks like starting off okay. So there are a few stocks that are looking positive as we speak. What about the mid caps and the small caps, and what's happening at the broader end of the spectrum? Actually, before we get to that, if we can pull up the money markets, the currency and the bond yield should come up on your screen, and let's see what's happening there. So 70.28. Well, a bit of worsening really. Yesterday we closed near about 70 levels, the current 70.06 or thereabouts, currently at 70.2750. The bond yields 7.24, 7.25 or thereabouts, 7.26, yeah. So just a small change really, nothing too dramatic. A lot of stocks flying around. Maybe they will cool off a bit, likes of BF Utilities, Tamo DVR, Blue Star, etc. Let's see if they settle down a bit. I don't think Simco would already be trading, but let's wait and watch. Maybe bring that stock up and see if indeed it is, because the floor price is at about 38. Well, for now about 3% higher. Let's wait and watch if that happens. And lastly, the aviation counters. Kotak reports suggest that airfares have been raised. So Jet Airways, SpiceJet and Interglobe Aviation 9% lower. No, I don't think these rates will last. Jet Airways had a big move yesterday, maybe positive. SpiceJet should also come up on your screen. 88. So some upsides here, nothing too dramatic. Brigade Enterprises, a big move from yesterday's session. Let's pull that one up, about 13 or 14% higher yesterday. Looks like starting off slightly more positively in today's session as well. Sameet, Chavan, if I can come in on Brigade Enterprises, I don't know how closely you look at it on the charts, but for somebody who initiated a long yesterday and carried home the long positions, better to stay long or in the cash market, of course, or would you book profits?
No, I think the kind of price and volume activity that we saw yesterday is quite encouraging, and the kind of move the stock has managed to surpass its 200-day moving average with some authority. If we look at the overall volume activity yesterday, we can see multi-fold volume activity in this particular counter. Apart from this, it's daily average volumes. So from here on, any minor pullback toward 230 would be a good opportunity, and those who have bought it at lower level, they should certainly stay put. They should trail their stop losses higher now, around 210, just below 200-day moving average. And from here on, we wouldn't be surprised to see this stock heading towards 255, 260 over the next few days.
Okay, you watch out for this one. Sameet, pharma companies look like starting off well today, Sun Pharma in particular. And we'll discuss the fundamental news as well. They've gotten awarded the preliminary injunctive relief by US Federal District Court. My conversations with Darshan seem to suggest that it's an okay set of news, but looks like starting off well. Would you trade Sun Pharma?
No, I mean, yes, the stock has consolidated in last couple of weeks. However, before that, we saw massive correction in Sun Pharma from the high levels of 540, 545. So from here on, we would see some kind of trading bounce back, but trading bounce back towards 440, 460 probably would be an exit opportunity, because we believe that at higher level you are likely to see some kind of selling pressure in Sun Pharma. Within pharma space, we like Torrent Pharma, which is clearly outperforming its peer counters. Although it is consolidating since last 3-4 days, we expect this stock to get some kind of buying interest around 1750, 1760 where it's trading right now, and the stock is on the verge of a breakout, so we would anticipate this breakout to happen beyond 1800, 1820 quite soon.
Interesting. Any thoughts on Sun Pharma? I mean, Parthiv, this news about the preliminary injunctive relief and even otherwise fundamentally, what do you do here?
Yes, very frankly, and as you very rightly pointed out, that it's nothing like game-changing in terms of helping the stock to kind of re-rate. It's just like something one can say in a very simple terms, that it would not lead to incremental competition for the company. But nonetheless, I think what our sense is on Sun Pharma, it's been a very frustrating last 2 years journey. A lot of wealth destruction, despite having a tag of being called a defensive stock. It has disappointed. I think some of the quarters have been well, and some of the quarters have been very disappointing. But now the bet is on especially the next year's pipeline and some of the specialty molecules which would materialize over the next 2 years. And yes, those molecules will bring up ramp up of cost. But I think if at all these molecules which have limited competition are ramping up fast, then probably the fortunes of the company would certainly change, because then on the current base, we will see a ramp up in terms of the volumes, ramp up in terms of the revenues and decent margins that brings along. And I think a lot of consensus is building up in terms of the worst of the price erosion seems to be over, because below this threshold, I think a lot of companies would be out of business. In even US based generic players would be out of business. So in that sense, I think the price rationalization seems to be on the card, and that should bode well for relatively lower cost players like that of Sun Pharma.
Okay, fair call. Parthiv, you were talking about companies that have a big earnings traction period lying ahead of them. Some have some minor capex as well. Would you be able to talk about a couple of them wherein not talking about a buy or a sell call, but where you believe the earnings trajectory is positive for the next 2-3 years, if not more?
Yes, so Neeraj, I think one company that I find in the specialty chemical space is alkylamines. So firstly, let me talk about the management. I think fantastic and great management in terms of how well they've kind of managed the company. And if I look at the historical track record, never ever this company has had any spate of bad balance sheet, wherein I think the balance sheet would have ever been overstretched. And this is the theme that I talked about, companies where the current capacities are operating at optimum level. They're looking for capex over the next 2 to 3 years, and that capex is not going to come with incremental bank borrowings but through internal cash accruals. And this is the case of point in alkylamines, where I think all their products, I think things like acetonitrile, the ethylamine, methylamine, all these are very important ingredients which goes into a lot of important industries like pharmaceutical, FMCG, etc. And more importantly, I think there's a more dependence now on domestic sourcing as compared to in the past a lot of imports that was taking place from Chinese manufacturers. And as such, I think a lot of costs have gone up. So I think companies like alkylamine all of a sudden are in a very, very sweet spot. Over the next 3 years, they have capex plans to the tune of 100 crores per annum, so which is around almost 300 crores. And I think the asset turns of these capex are around 2 times, which is also very decent. And all this new capex will come at a very healthy margin track record. So I think what we feel is that over the next 2 to 3 years, alkylamines can deliver stellar set of numbers. The top line, which is currently hovering at around almost a run rate of 900 crores can easily inch up to almost 2000 crores. And with the margins of around 18-20% and PAT margins of around 10%, I think this company can massively re-rate and create good shareholder wealth. So this is one idea that we like. Another stock I think that I talked about even in the past is in the capital goods segment, which is Cummins India. And here also I think this is a company which has a potential of generating around a run rate of 600 to 700 crores of free cash flow. I'm quite sure that the way the new capex cycle is starting, I think this is a company which will talk about incremental capex, increasing its capacities, and they're into very specialty plays, whether it's catering to the railway segment, whether it's catering to the construction equipment segment, and also the gensets, which are required in a lot of infrastructure related work. So I think these are the two companies where I find a lot of comfort in terms of the current valuations, how they are placed, and also the earnings trajectory over the next 3 to 5 years.
Okay, do watch out. Alkyl Amines, I think Bombay based, well regarded by a number of portfolio managers as well. I've heard this name in the past as well from a clutch of people. Do watch out for the stock. 3-month returns 24%, not bad. It's actually had a good move as Alkyl Amines. Okay, 8 minutes done, and the pre-open rates have settled down. As it appears, we'll start off about a percent higher, 10,817. So the SGX Nifty wasn't quite a lead indicator, only in terms of direction, in terms of value. We're doing much better than what the SGX was indicating, and that's very, very interesting. The question mark only is, after this start, will we last, or will there be some bit of profit booking ahead of expiry? Keep in mind that we had a sharp up move in the latter half of trade yesterday as well. Indiabulls Housing, Sun Pharma, Yes Bank are among the top gainers on the index. So those are the ones that are looking to take the index higher. Infosys showing a bit of a bounce, and I think technology is another pocket that we'll discuss with Sameet Chavan. But 5 minutes left for the markets to kickstart trade. Let's tell you all that you need to know to stay ahead in trade today. Firstly, Carlyle GIC found an opportunity in SBI Life Insurance. It will buy about 10% stake in the company for 5,200 crore rupees. This is an Economic Times report. It's good news for Sun Pharma, and it gets relief from a US court with regards to a patent infringement case. After being accused of not passing on GST benefits to consumers, Hindustan Unilever says it will consider legal action against the same. The Anti-Profiteering Authority had ruled on Monday that the company profiteered to the tune of 536 crore rupees. Simcoe's promoter, Titagarh Wagons, will sell 15.4 lakh equity shares, or 5.4% of its stake in the subsidiary Simcoe. The stake will be offloaded via an offer for sale. And in key brokerage calls, Motilal Oswal is bullish on Petronet LNG, as increasing LNG glut is likely to support prices. And Motilal Oswal also says that Airtel's cash burn and leverage situation is reaching an uncomfortable level. Well, a couple of stocks in news, SBI Life. Now, people would be wondering, why is it that the stock has fallen if indeed Carlyle GLC has set to set a stake? The market cap about 57,000 crore rupees. The Economic Times report suggests that they'll buy 10% for 5,200 crore rupees. So is the deal happening at a discount? If it is happening in the first place, that's something that could be in the back of mind of people. But yeah, a lot of insurance plays have come off. SBI Life is no exception. I think HDFC Standard Life has come off, ICICI Lombard or ICICI Pru Life has also come off a bit. So those 2 or 3 life insurance names aren't quite doing all that well. Keep that at the back of your mind. Quick thoughts out here though. Sameet Chavan, as I said, a couple of names, and IT. Infosys looking like it'll bounce back a little bit on start, false start, or would you believe that it could bounce back even further at 652 on pre-open rates?
See, it's possible we could see some kind of relief move in last couple of months. On 2 occasions we saw Nifty IT bouncing back from its 200-day moving average, and yesterday's low is somewhere around 200-day moving average as well. So from here on we would see some kind of relief move. But overall, if we expect index to continue this rally, then we would rather focus on high beta names. We would certainly avoid Nifty IT, which is more in a consolidation mode with a larger view. So we expect Infosys, TCS, the entire Nifty IT space to undergo some kind of time-wise consolidation. So at this juncture, we would certainly avoid. In case of bounce back also, we don't want to get into IT counters. We would rather focus on a lot of mid-cap counters that are trading around their major support. That there are so many mid-cap counters that are on the verge of a breakout. So we would rather focus on those pockets.
Yeah, we'll talk about one of those as a top call from Sameet Chavan as well. But Parthiv, just a quick thought, about 30-40 seconds because we're very close to market open. SBI Life, and if indeed the stake sale is to be bought at a discount, what does this mean, if at all anything? Would you invest into SBI Life on this weakness?
I think still my preference lies with HDFC Life, Neeraj, and frankly speaking, I think the way they have advanced in the protection business, which brings in fantastic new business margins at almost around 24%, and management being very confident that they'll be able to maintain that run rate of margins, I think it's way ahead of what SBI Life or ICICI Pru earns, and I think it'll take a lot of catch up for them to even come close to these margin levels. So I think still I put my neck out and believe that HDFC Life would be the best life insurance play to own.
Okay, Parthiv, stay on. We'll just take in final thoughts post-market open as well. But about 40 seconds left for the markets to kickstart trade. Sameet Chavan, if I had to ask you for one top call for the session today, what would that be?
See, I had mentioned BML, which we expect the stock to head towards 950, but the kind of pre-opening move that we are seeing, it is likely to open with a decent bump up. So use minor dips to go long in BML, target 950. But apart from this, I would like to share another idea of Canfin Home, which is on the verge of a breakout. So we would expect Canfin Home to head towards 310, 315 over the next few days.
So you would be comfortable buying both today, Sameet?
Yes.
Okay, Sameet, just stay on again. Opening thoughts from you post-market open. Just 6 seconds left for the markets to quick start trade. We'll have a start in the green, much better than what the SGX was indicating. The question is, do we hold on? About 1% for the Sensex, well, not 1%, really 0.75% for the Nifty Bank. Actually, it's cooling off. Maybe not cooling off, I'm speaking too soon. But yeah, a fair degree of green on the screen for all the benchmark indices at least. I guess the mid caps and the small caps too would start off on a positive note. They didn't bounce back as much yesterday, remember? So do they play a bit of a catch up? The small cap space has started off rather briskly. You don't usually see this. The BSE small cap index up about 0.5%. The mid cap index up about 0.75%. So not a bad start. The market breadth is positive. Let's see what's looking at the heat map. Hardly any losers save for the crude impacted names. Again, these don't last. Yesterday, the OMCs hardly lasted on the gaining side. I don't quite know if they last on the losing side today, but these are the only ones which are in the red. Look at the quantum of green on the screen. Fair degree of green. Fair degree of heavyweights like Reliance, etc. trading well and truly in the green. And the list of gainers, Sun Pharma, small news, but well, it could do with some small green shoots as well, up about a couple of percentage points. Indiabulls Housing Finance and Yes Bank. Bajaj Finance, we were talking about it, about 1.5%. Finserv, amongst the top ideas from Sameet Chavan, up about 1.5%. Eicher Motors up about 1% as well. So small, about 1%, 0.75% kind of gains for a lot of stocks in the session today. It's not a bad start. We are holding on and currently very close to being 1% higher. What about some specific trends? 2 or 3 newsmakers that I want to point out. Firstly, Simco, because of the stake sale from the promoter entity at 38 rupees, I would reckon that the stock would correct. Yes, 7.5% lower, 39.5 for a Simco in the session today. The OFS floor price is at about 38 rupees, so the stock would veer around those prices. What about some other stocks, some key movers, some stocks in news? Well, Kotak says that there are higher airfares now. It's not prompting any kind of rallies into these names. Jet Airways is the only one, and that was up and about in trade yesterday as well. SpiceJet, in fact, is down about a couple of percentage points in the session today. What about some top movers from trade yesterday, the likes of Brigade, etc.? And let's see what's happening there. Brigade, no, not so much. Jet Airways, I already spoke about it, but yeah, about 1% higher, not bad. And Z, which was up about 4.5% yesterday, starting off just about marginally higher in trade. So no big moves, but the index itself is doing rather well for itself. Sameet Chavan, for somebody who's trading the Nifty or the Nifty Bank and is looking at levels for the expiry today, what is it that you envisage? And if you were long on open yesterday and you're sitting on 1.5% to 2% gains ahead of the expiry, would you book profits right now?
See, as I mentioned in my opening remarks also, we expect this expiry to pan out about 10,800, the kind of unwinding we saw in some of the out of the money call strikes. So that was an encouraging sign, and that was this indication that we are likely to open with a upside gap, and that is what has happened. So from here on, one should trail their stop losses, hold on, around 10,770. We would now revise our stop loss. Those who have bought it yesterday in the latter half, around 10,650, 620. They should certainly stay put, and from here on, in the latter half today also, we could see some kind of short covering happening that would push the index toward 10,870, 10,880 as well.
Okay. Sameet, we'll leave it at that. Thanks much for joining in and giving us that perspective. Really appreciate your time. Have a good expiry, and thanks for recommendations today.
Thank you.
Well, watch out for those names. Sameet, Chavan recommending them. Parthiv, before we let you go, a bit of a bounce in the commodity names, I guess, because of the US markets moving up. Commodities by and large have bounced back. But the correction that we've seen in the Hindalcos, just, Tata Steels of the world, Vedanta is the top gainer right now. What do you do with the commodity names?
See, Neeraj, I think there is a huge talk about, for the aluminum play, the way the prices have corrected, and there is starting to be a lot of dumping of the surplus capacity. Some sort of, I think, anti-dumping moves coming from the government, some sort of duty hikes. So I think that should bode well for the industry. But I think if one wants to go for, I think, the metals play, currently at this juncture, what I find comfort in is buying a stock like Tata Steel, which is well backward integrated. And I think because of its cost metrics, I think it will be better placed. This is one for the steel sector. And in the non-ferrous play, I think Vedanta seems to be extremely good in terms of the valuation call, and also the overhang about the selling pressure due to the tax collection seems to be over now. So I think Vedanta could be another stock that one can look at. But again, I think these are stocks available at very cheap valuations, and we might have finished almost mid-cycle of the commodity play here. And looking at the domestic demand going ahead, I feel that these can be good bets over the next 1.5 years, but an investment stop loss should not be ruled out even in such companies.
Okay. Parthiv, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. Really appreciate your time. Well, the markets are looking very good for themselves thus far. Let's see if they last. To talk about what our DII is doing and what is Principal Mutual Fund doing in a scenario like this, Rajat Jain, the CIO of Principal Mutual, joins us right now on the show. Rajat, good having you. Thanks much for joining in. It's been a while, so good having you today. What's your thesis, Rajat, about whether you would be comfortable putting money to work in a scenario like this, where in the globe, I don't know whether it's cheap or expensive, but it's certainly very volatile.
I think that's very well put. I think the markets are all over the place. I mean, yesterday, the US was an extreme example of what the volatility is all about. To come back to your point, initially, would you be comfortable putting money in the equity markets? Oh, absolutely. Just a couple of points I want to say about this. A, it's not tactical. I mean, I think this year is going to be quite volatile. We saw the last quarter, the current quarter, that is October, December, in terms of volatility was extreme. And I think while 19 may not be the volatility of this order, but still, given the fact in terms of the elections in India, global geopolitical scenario, the Fed behavior, all these will keep the markets volatile. But I think, macros clearly have a role to play, and especially when they're getting worse, when they are deteriorating, certainly they are much more meaningful than when they are improving, in the sense that when things improve, then people begin to look at, companies themselves, than worry about the macros. So in India, we are seeing clearly, as we all know, the macros are getting better. Oil clearly has a lot to do with this, though we don't know if it's going to remain at 50 or wherever. It's such a very sharp fall, a 40% fall, the last probably 4 to 6 weeks. And then in terms of other macroeconomic parameters, I mean, interest rates have come off, the currency is more stable. So overall, I think people will stop worrying about the macro as much, and they're focusing on the companies. And when they do so, I mean, what you will find is that both mid caps and large caps, and mid caps particularly, you will find decently well-run companies, good management, good quality management available at, I won't say cheap, but fair decent valuation. So I think it's a good place to be in equity if you are looking at a say 2 to 3 year time horizon all put together.
Interesting, and I hope that equity investors and mutual fund investors do have that time horizon in mind. Rajat, the tremors, for lack of a better word, the tremors of the past couple of months due to idiosyncratic factors like IL&FS behind us now? Has December been a smooth month for rolls, and is liquidity back in that market?
I mean, clearly things are better than they were say 4 months ago, but clearly not, situation is not what it was pre-September, let's put it that way. So incrementally things are improving, but are we absolutely back to where it was? No, certainly not. It's work in progress, and the more things, it's time. I think it's the more things go on this way, unless and there are no new. It's not about liabilities really. It's about people having concerns on the asset side of balance sheets for NBFCs. If we don't see no major surprises, I think gradually bank lendings. Right now what banks are doing are buying out pools or assignments from NBFC. They're not really funding the balance sheets of the companies yet. I mean, not true for all companies, but while the big ones are getting funded, not all are getting funded. As things stabilize, probably liquidity will again flow back to the company's balance sheets themselves. So to answer your question, we are not back to where we were pre-September, but are we as bad as September? Not at all. We are certainly much better than what we were in September.
Well, which is heartening to know. I don't know whether it's a tactical move or otherwise, but would you believe that the fresh investing that you do, if you do in the financial space, would largely be in the banking pocket as opposed to the non-banking financial companies pocket? I just want to get a sense from you as to how do you believe the Q3 and Q4 earnings wise would be for the NBFCs, and therefore how would the market view that? Because the belief in September was that post the September quarter, the next 2 quarters will be a washout in terms of growth numbers for almost any of the NBFCs, save for maybe 1 or 2.
Yeah, actually, before I answer your question, just about our portfolio. So in financials, clearly, I mean, there are 3 pockets. So you have the state-owned or the PSU banks, you have the private sector banks, and within that you can have the old generation and the new generation private sector banks, and then the NBFCs. So we were underweight NBFCs even earlier, simply because of expensive valuations. I mean, the good ones were really trading at expensive valuations, and even the, I would say, the medium-sized or smaller ones, but not really cheap. So we were slightly cautious on NBFCs. At this point of time, clearly, I mean, we'll wait for the Q3 numbers to come out, and certainly we do expect for most NBFCs, but for a few which are retail facing, and they have always held that retail demand, at least for them, has held up well, and there's no issues of growth. I think for a good chunk of NBFCs, clearly simply because money is a raw material, and if you have issues in raw material cost and the availability, is going to impact the size that you can grow to. So I think NBFCs will be certainly slower in growth, both Q3 and Q4 across, but for a few exceptions. And in the PSUs, I think we have always had the preference for large PSU banks. And I think they are no different in management, ability, quality than a private sector corporate bank, for example. And the issues are the same. That is, they had issues on NPAs, which gradually seem to be getting better resolution-wise, less creation of fresh NPAs. And in terms of, I mean, the issue with PSU banks is really capital. So the large PSU banks really don't have issues of capital, just like the private sector corporate banks have no issues of capital, essentially. So I think that category, corporate banks across PSUs and private sector space, I think is likely to outperform, at least through 2019 is how we see that.
Rajat, one final thought, and that would be on pockets that have gotten beaten down a lot due to maybe global factors, slowdown fears, or inbound factors. And I can think of 2. metals, which we just discussed a while back, of course, and information technology, wherein the stocks have come off quite a bit. Stable companies, largely fair degree of large companies available to invest in as well. What would your stance be currently?
On IT, see, because as we spoke in the response to the first question, it's going to be a volatile year, global factors, not because of fundamental reasons. The volatility in terms of news flow, central bank action, geopolitical scenario, whatever. India, you have the election scenario. So volatility is something that IT can be a good defensive in 2019. However, at the back of it, at the back of our minds, we got to realize that 2019 probably global growth does slow down, and the US has been amazing growth. The economy is having amazing growth for a very long time now. We're seeing that sort of slowing down. And if that were to happen, it's going to put some pressure on IT budgets, IT spends, clearly. So that is a headwind that IT would face. However, the fact that it is stocks aren't, you're getting a decent quality companies at fair valuation, 12, 13, 14 times valuations, and in a defensive, say, suppose you have a scenario where the currency weakens, you have volatility, and IT comes back into flavor. So you can more tactical play in IT, I think, on account of that. Metals, and if we go back to the earlier point about the economy slowing down, I think, but for, so across as a category, I wouldn't think metals are going to do very well, simply because the underpinning is that the economy does slow down substantially. You could have tactical plays here and there, and these could result from companies improving operations. There could be government action in terms of anti-dumping and so on and so forth. But across as a category, I would be cautious metals.
Okay, we'll leave it at that. Rajat, to you and your team, season's greetings and have a fabulous 2019.
You too, Neeraj. All the best to you and team.
Thank you so very much. Well, time now for a short break on Indian Open. When we return, we talk about what's happening in the demand on the auto space with Madhu A of Muthoot Capital Services, and everything from global commodity prices to Vedanta's expansion plans with Chairman Anil Agarwal. Stay tuned.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with the Indian Open right here on Bloomberg Quint. Markets holding out about 0.75% in the green for all the key benchmark indices. But let's move focus to the corporate conversations. Two-wheeler sales hit a speed bump in November after months of robust growth. While that's left manufacturers with a large inventory, vehicle financiers like Muthoot Capital might also be feeling the pinch as its throw internal targets haywire. So how does Muthoot Capital hope to maneuver through this rough patch? And more importantly, what is it that they believe is happening in the month of December, and what is the outlook for the quarters ahead? Let's post that question to the company's CEO, Madhu Alexiouse. She joins us right now on the show. Madhu, good having you. Thanks much for joining in. Straight off the bat, how is the month of December looking like? Yesterday we had a guest who said that their internal dealer checks, not necessarily for two-wheelers, but four-wheelers and autos by and large, seem to suggest that the numbers have come off. The wholesale numbers have come off quite rapidly. Is it showing in your books as well, or is the retail experience slightly different?
Good morning, Neeraj. I think it would not be right to take December as a benchmark and think about how the industry is performing. In fact, December is the month when the model change happens, and a lot of customers, with the hope that they would like to buy a new year model, or there would be new models that would be getting launched in the new year. People generally wait in the month of December. But my overall perspective about two-wheeler industry is when we started this year, we said that there would be a sale of about 2.25 crore units of two-wheelers. Last year it was about 2 crore. And let me tell you, we are bang on track as far as this 2.25 crore is concerned, because by November, the total sales were about 1.53 crores, and 4 months to go. I think two-wheeler industry would definitely sell 2.25 crore. There is no doubt about it. And the growth would be around 10 to 12% around that. That is what we are hoping. So as far as two-wheeler is concerned, and Muthoot Capital's view is that it would deliver 2.25 crore as projected during the start of the year. As far as we are concerned, we are not very much worried about some hiccups of November or December, because if you deep dive into the figures, we have seen that the motorcycle sales actually has been growing, especially the entry level, the economy segment. The growth was close to 30% as of November, which is a good sign, and that is where our distribution network, which is predominantly in the tier 3 and tier 4 cities, and that is where all these economy segment sales happen. So we are actually not much worried about these couple of hiccups that is there. The numbers shows us that the shift in the models, the shift in the proportion of motorcycle and scooters may change, but overall sales guidance is 2.25 crore for this financial year, and we are also hopeful of hitting our guidance that we had set in the beginning of the year.
Interesting. So am I understanding this correctly, that October and even November for a player like you was actually okay? December might be slightly indifferent, but you don't believe that that's a benchmark?
It is too early to tell about December because we are yet to close the month. But we are not worried. That much I can say. We are not worried as far as numbers are concerned. Compared to last year, compared to Q2, we are actually not really worried about December.
Okay, very interesting. The other bit is, because you finance two-wheelers in such a big way, you would have a sense of how the trends are looking like. Did I understand you correctly when you said that even if December were to turn out to be a bad month for the two-wheeler industry, things could bounce back in January or February?
Q4 definitely is one of the very important quarters for any auto segment, whether it is two-wheelers or four-wheelers. And we believe at Muthoot Capital, we believe Q4 is going to be really good, because November, December is the month where customer try to wait, or November was a month where immediately after festive seasons were over, customers would have waited that, okay, let us wait for the new year vehicle to get, into the market and buy the new 2019 models. And so we believe that Q4 is definitely going to be different compared to whatever we are seeing right now. It is also important to mention here that there were a lot of apprehensions on the insurance costs going up, vehicle costs going up, and a lot of other issues. But that I think is now not an issue, because the two-wheelers are funded on the on-road price, and generally insurance is also added into the on-road price. So a lot of customers have come back who had postponed their purchases. They have come back. They have bought their vehicles. So given the escalation in cost, there would be a lot of pressure on financing as well, that the customers who were earlier buying cash, they would like to take finance because the cost has gone up and they would need additional money to fund these vehicles. So we are saying that with the cost escalation, with the pending demand that customer would have postponed for Q4, I think for financing, for two-wheeler financing, Q4 is going to be definitely good quarter, and whatever shortfall is there can be made up in Q4.
Interesting. Madhu, one final question really. The common belief has been, and maybe rightly so as well, that lack of or tighter liquidity would mean that the business for NBFCs by and large, not just auto financiers necessarily, but NBFCs by and large would come off quite rapidly in Q3 and Q4. Maybe going ahead as well, but that's just too far off. The near term might come off. In fact, some of the NBFCs have alluded to that fact after the Q2 numbers, that Q3 and Q4, the growth will be very, very flat. How has the experience been for, or what's the belief at Muthoot Capital? Would it be the same for you, or do you believe that Q3 at least is not looking flat?
As far as Muthoot Capital, because we predominantly focus on two-wheeler finance, and these are highly retail finance business, we don't think so liquidity is kind of impacting us right now. Q4 is going to be much better because banks were really positive about Muthoot Capital. They have supported us like anything. Even during the Kerala floods, there were a lot of apprehensions, but our bankers really put their faith. They were, our lenders, they were behind us, our investors, our analysts, they were behind us, and they supported us. So we actually do not foresee any issue as far as liquidity is concerned, because we had been very steady in our business model. We'd been very steady in our asset quality. In fact, asset quality had been improving after the floods in Kerala. So there are a lot of positives that are there besides liquidity, and which warrants to be, for the lenders to lend in such industry. And given a lot of other issues that are there in the NBFC sector, I think two-wheeler and retail finance is something which had been very good, very positive. We had been showing good results. So I don't foresee any problem even in Q3. Q4 is definitely going to be excellent. We were really not in any kind of problems as far as liquidity is concerned. Q4 is going to be definitely much better than Q3. So even in short term, I don't think so. Even in Q3, I don't feel that liquidity is impacting us in some way.
Okay. Madhu, we wish you all the best for the quarter and the year ahead. Thank you so much for taking the time out. Season's greetings to you and everybody at Muthoot Capital.
Thank you so much, Neeraj. Thanks for the call, and also wish you a very happy New Year.
Thank you so much. Well, a very optimistic Muthoot Capital, I must say. And let's see if the numbers throw that up when they indeed come out with the quarterly results as well. The management sounds very confident, of course. So that's a good sign. The market's looking okay too. We take a break. Back from the break, we talk about the global commodity prices. In fact, the discussion ranges from global commodity prices to expansion plans of Vedanta with the chairman, Anil Agarwal. Stay tuned.